You've owed back taxes to the IRS for years. You're finally ready to do something to address the problem, and you hope that you can somehow get a reduction of the balance. What about an offer in compromise? Turns out you don't qualify. You figure your best option is a payment plan when you hear about something called a Partial Pay Installment Agreement that could potentially help you pay less than the full amount that you owe. But what is it, and do you qualify? What is a Partial Pay Installment Agreement? And that's the topic of today's video, on the other side of the intro. What's up, everyone? Adam here from Legacy Tax. We are the premier tax resolution firm in the United States. We've helped thousands of clients with unfiled tax returns, back taxes, tax liens, and of course, IRS levies. You don't have to fight the IRS alone. You can reach us at 1-877-538-9546. You can also check us out online. Go to www.levyking.com. We've also put out a free ebook called End the Tax Nightmare: Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, we'll show you how to stop IRS levies, liens, and garnishments without paying the tax in full, how to set up the payment plan that you want and not the one that they want, how to potentially settle your tax debt for less than you actually owe. Our book has been a top seller on Amazon for years, and you can buy it right now for $19.99, but I want to give you a copy of the book absolutely free. Just go over to our website, www.endthetaxnightmare.com, and enter your name and email, and we'll send you a copy right away. No charge. Not even for shipping. Totally free. Before we go any further with the video, please take a moment to subscribe to our channel, and don't forget to smash that like button for the YouTube algorithm and hit the notification bell so you'll get a heads up each time we drop a new video. Okay, let's dive into today's content. When it comes to resolving IRS problems, the offer in compromise gets all the publicity. Don't get me wrong, the OIC is a great tool to resolve a tax debt because it allows you to potentially settle your tax debt for less than the full amount that you owe. But the vast majority of tax problems are resolved by setting up a payment plan. There are many different types of installment agreements. For a longer description of the various types of installment agreements, watch this video. The Partial Pay Installment Agreement is my favorite of all the various installment agreement types because it can be similar to the offer in compromise, in that it allows you to potentially pay less than full amount you owe, but it doesn't take as long as an OIC, and it's not as difficult to get approved. In order to understand the Partial Pay Installment Agreement, you've got to understand something called the Collection Statute Expiration Date, also known as the CSED. To put it simply, the IRS has 10 years to collect tax debt. The 10-year clock begins on the date that the tax balance is assessed. So, generally speaking, if you filed a tax return on April 15, 2024, the IRS has until April 15, 2034 to collect the balance you owe. Whatever they don't collect by that date becomes uncollectible, which literally means that the government cannot come after you to collect the tax. To be clear, there are some circumstances that can extend this 10-year collection period, but generally speaking, 10 years is the limit. With that in mind, let's look at the partial pay. When you're going for a partial pay, the IRS considers the following factors in deciding whether to approve your request. First, all tax balances for all tax years must be resolved with the PPIO. You can't resolve some years, but leave others unresolved. For example, if you owe for 2012, 2017, 2018, and 2019, you cannot set up a PPIA for 2017, 2018, and 2019 and not include 2012. The second requirement is compliance. The IRS won't accept your PPIA request if you have any unfiled tax returns for previous years. You'll also need to be current with your withholding from your paycheck if you're an employee, or be current in making your estimated tax payments if you're self-employed. The next thing to consider is your history of defaulted installment agreements. The IRS might not allow a PPIA if you have a history of egregious non-compliance. This means that the IRS is going to look back at your compliance history to look and see how long have you been non-compliant. If you have a long history of not filing or not paying, the IRS may not allow a PPIA. In summary, a partial pay installment agreement helps solve an IRS problem by reducing your monthly payment to an amount that you can comfortably afford while the 10-year clock continues to run. Eventually, the tax debt will expire and you will not have paid enough to pay off the debt in full. A partial pay installment agreement can produce outcomes similar to an offer in compromise, whereas an OIC reduces the debt itself, a PPIA reduces the amount of the debt that you repay. They are both strong options to help get rid of tax debt. Speaking of tax debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? No two cases are exactly alike, so how do you know exactly how much you can settle for? Well, I've created a free tool to help get you qualified for a fresh start. Just head over to www.levyking.com or click the link below. Follow the prompts and answer a few simple questions and we'll help you figure out your eligibility. That website again is www.levyking.com, or you can give us a call at 1-877-538-9546. That's it for this week. Talk to you later.